ARKK is the ARK Innovation ETF managed by Cathie Wood and her team at ARK Invest. It launched on October 31, 2014, and quickly became a pioneer of thematic investing focused on disruptive innovation across technologies such as artificial intelligence, biotechnology, robotics, energy, storage, and cryptocurrency. The fund is actively managed, aiming to outperform by investing in companies it believes will change the world while maintaining at least 65% of assets in domestic and foreign equities related to its innovation theme. ARKK currently manages about $6.7 billion in assets under management. It holds approximately 50 to 75 high-conviction growth stocks. The top 10 holdings include names such as Tesla, Zoom, Roku, Coinbase, UiPath, Block, Twilio, Unity, and Shopify. The expense ratio of ARKK is 0.75%, which is higher than most index funds but common for active funds focused on innovation. It pays no regular dividend, so current income is negligible, well under 1% per annum. ARKK has delivered impressive returns in years when the innovation theme shines. Over the one-year trailing period, it returned about 59.2%. Year-to-date, it is up around 21%. Over 3 years, it has delivered approximately 56.4% annualized total return. Over 5 years, however, it shows a slight drop of negative 4.65% total return. That reflects the collapse in certain high-growth stocks during 2021 and 2022. The fund's performance has been highly variable. In 2020, it rose roughly 149%, while in 2022, it plunged nearly 67%. In 2023, it rebounded 68%, only to underperform the S&P by 12% in 2024, when markets favored value and stable profit over disruption. ARK is powered by Cathie Wood's conviction in future-changing technologies. The fund's lead positions reinforce this belief. For instance, Tesla remains around 10% of assets. The fund also recently trimmed its holdings in Circle, the stablecoin platform, after booking profits. Thematic investing involves high concentration risk. ARK has seen periods when its performance overwhelmed the market and periods when it underperformed badly. According to Morningstar, it ranks among the highest wealth destroyer funds due to large asset outflows following its peaks. Let us examine key metrics using my meter rating across 5 categories. Income potential 2 out of 5. The fund pays almost no income and is focused on growth, not yield. Growth potential 5 out of 5. In bull phases, it can soar due to high conviction bets. Volatility control 1 out of 5. Returns swing wildly and drawdowns can be deep. Tax efficiency 3 out of 5. No dividends simplifies tax, but capital gains can be large when distributions occur. Simplicity 3 out of 5. Easy to buy via ticker ARKK, but complex in strategy and volatility. Total score 3 out of 5. Who should invest in ARKK? What investors dream of is catching the rapid upside of transformative innovation. Young investors or those seeking long-term growth and with high risk tolerance may find this fund appealing. It suits investors who can hold through roller coaster markets and who believe in innovation trends lasting decades. But it is not meant for income seekers or risk-averse investors. Unlike dividend funds, ARKK pays no monthly income and can lose more than 60% in downturns. If you want tax-friendly passive growth with less volatility, a standard S&P growth fund may work better. ARKK is for those seeking high-conviction exposure to emerging tech, but willing to endure wide swings. If you have any videos you would like me to cover, say it in the comments below, and I will break it down in plain English.